Swaminathan Iyer, senior economist, joins us. Pavan Varma, Jay Panda, Arvind Pangariya, Dr. Santosh Mehrotra, Chetan Bhagat, all top voices on this panel tonight. Swaminathan Iyer, how do you view the budget?
I would say it is a courageous gamble on growth. A courageous gamble saying that, we will risk high deficits and high inflation in an all-out dash for growth. And we believe that this will then lift all boats. So instead of trying to do a little bit for lots of people, lots of different guys, let's have one big push which lifts all boats. All gambles don't come off, so there are risks. So you need to cross your fingers. But I would say that in her place, I would have also gone for the same kind of gamble. However, while there is courage on that front, there is cowardice, I would say, on the privatization front. You have fallen far, far short of your targets. And having fallen short for the next year, you are, instead of saying, I will finally get my act together, you have reduced the target for privatization, asset sales, even further to only 65,000 crores. Please, last year, Sitharaman announced something called a national monetization pipeline. They were going to sell old infrastructure, ports, railways, etc., and to raise 6 lakh crores within 4 years. What has happened to that particular dream? Why are you not going ahead with that? I mean, the failure on privatization is so massive that heads should have rolled. I mean, somebody should have been asked, why does it take 2 years and you still haven't privatized BPCL, Container Corporation? Why does it take so long? Why should an IPO like that of LIC take more than 1 year and you haven't yet done it? So, the whole process there's something very seriously wrong. I would add that if you have given up on privatization and sales as appears to be the case, because you have lowered your privatization target next year to only 65,000 crores, where are you going to get this money for this huge infrastructure push? It's very clear you are not raising tax rates. Money is not going to come from there. So it was an excellent idea to say we will sell the old assets and use it to build new ones. But I find that there is no action on this. It's extremely slow, and there is not a word said about it in the budget speech. And to me, I said it's courageous on the fiscal, on the capex front, but a streak of cowardice when it comes to privatization.
Okay. Mr. Arvind Pangariya, how do you view the budget exercise and some of the commentary today?
Yeah, no, if I can take 2 or 3 minutes, Rahul. First of all, I must say, there's something that you said in your opening remarks, that this is a development budget, and it really reflects the Prime Minister's thinking that when we do development, it's for everybody. So, we had some initial discussions, if you recall, the view was expressed that the budget speech will be a laundry list of giveaways for this group and that group. But for the first time, I see that this is a budget speech in which hardly any group got mentioned, whether it's scheduled castes or scheduled tribes or OBCs or women or elderly and so forth. Hardly any groups got mentioned. It was all about development of regions, development of sectors. So that is the first thing. Fiscal consolidation has begun as well. This is a good, it's a symbolic consolidation, 0.5 percentage point reduction. But it's a good one. COVID is still not completely behind us, but the courage has been shown that, look, we are now returning to fiscal consolidation. Capex expenditure, fantastic jump, 35%. And now for the first time, about 2.9% of GDP, fantastic. Emphasis on the cities, particularly tier 2 and tier 3 cities, very, very important. It's something states ought to be doing, but they are not. So therefore, I think the center has to take some initiative and is there. Lastly, I would mention my favorite is economic zones. I think that legislation was overdue for overhaul, and I'm really glad it's now been taken up. If we do it right, if we provide for flexible labor laws inside these zones, if we also allow the custom clearances very rapidly, both ways, going in and going out, and we take the environment in the tier 2 and tier 2 and tier 3 cities also into account in making this legislation, because that's where a lot of the labor-intensive industries want to locate, because they can't afford the cost of living. The workers cannot afford the cost of living in Delhi and Bombay. or very large cities. So many of these zones should now start appearing in the tier 2 and tier 3 cities. If that is taken into account, I think we could really turn this into a big, massive expansion of jobs and the victory in the conquering of the global markets that I talked about. So these are the positives. On the negative side, of course, my favorite one, tariffs have continued to rise. Unfortunately, that thinking seems to be firmly embedded now in the government that anything that we import and also produce at home cannot be left without tariffs. And that, to me, is a reversal of many years of liberalization policy. So those are the big ones. Privatization, I shared some of the things that Mr. Iyer has said. I had hoped there is some signal in the budget reassertion, but that seems not there. And that extends particularly to the public sector banks, because two of the public sector banks were supposed to be privatized under the previous budget, but there was no mention.
Okay, let me bring in Pavan Varma. Pavan Varma, one common courageous thread that runs through the budget is that electoral populism of the freebie kind dehyphenated from elections. Surely that's something to celebrate. But the opposition has come out. Your own leader, Mamata Banerjee, has come out and made a number of very scathing remarks. From what you're hearing from some of the economists and other leading thinkers, those remarks could be viewed as very uncharitable. Why make them?
Thank you, Rahul. Nirmala Sitharaman is someone I consider a friend. So it's nothing personal. And she has a tough job. But let me say that before the budget, she had apparently two unwelcome guests in her large office in North Block. One was the middle class, one was the poor, waiting expectantly for some relief from the finance minister. I think the finance minister looked through them, and that's the reality of this budget. The middle class has borne the brunt at its level of COVID. Incomes have shrunk, jobs have disappeared. And as far as the poor is concerned, the core middle class has shrunk in 1 year from 99 million to 66 million. As far as the poor is concerned, in 1 year, the number of people who earn less than $2 a day has gone up from 59 million to over 120 million. So you have a situation where there is genuine suffering in the base of this pyramid. And the successful cannot secede to form their own republic. So we needed at this moment a budget that post-COVID would provide immediate relief, tatkalik kal, not amrit kal, to those suffering the most, in particular the middle class and the poor. And that's not happened. I'll take 1 minute to explain. The middle class has got no relief. It's an amazing argument that if we build roads, the middle class would at some point travel well on them. And so that's a relief. The middle class is looking for relief today. They have been pretty loyal vote banks of the BJP in the past. What has the government done for them? And as far as the poor, I've already given you the statistics. Now, what does the government do? In this budget, it has reduced subsidy on fertilizers by 25%. The food subsidy has been decreased by 28%. The LPG subsidy in 3 years has been reduced by 83%. The budgetary allocation for Manrega has been cut by 26%. Education and health. Can you imagine a sector like health, which the poor need? Health, the outlay has gone up from 86,000 crores to 86,200 crores. 200 crores increase. The educational allocation is still 2.6% of the budget, unlike the NEP suggestion that it should be 6% of the budget.
Okay.
The other sector is MSME. and the unorganized sector. They contribute 45% of the budget to the GDP and 85% of unemployment. They are devastated and shattered. The government has come up with the old scheme that increased the amount of loans to them. Risk-averse banks are not giving loans. You needed out-of-the-box thinking. You needed innovative thinking to revive this sector, which provides the greatest employment, which is the great bane of our times today. So you can talk of cryptocurrency, but there is no real currency in the people's hands. And I think, therefore, this budget is anti-poor, anti-middle class. It is tinkering with more of the same. It's a routine budget. It has not risen to the challenges of the time.
Okay. Jai Panda, quick response. Vice President of the BJP. Yes.
Well, first of all, I think we have two very respected economists, and they have, from what I heard, given it a very strong thumbs up, and I think that's what we should be looking at. Now, Swaminathan Iyer especially is very independent, and when he says this is a courageous budget, that's true. But I don't agree with him that it's a gamble, because this budget is a huge commitment to infrastructure, and the Modi government has shown that it can do infrastructure very well. If you look at the rate at which highways have been built, the rate at which other infrastructure has been built in the last few years. For example, out of this massive 11 lakh crores that is now going to be spent on infrastructure, including both the centre's direct spending and the grants that it's going to give to the states, 15,000 crores is going to go to the northeast. Look at the track record. In the Modi government's tenure, 2 northeastern states have got railways for the very first time. Apart from that, massive work has already happened on providing drinking water direct to the homes of tens of millions of households. So when we say that 60,000 crores is going to be spent to add another 38 million homes who will directly get piped drinking water to their homes, one should not be skeptical. Similarly, if you look at the housing assistance to the poor, already crores of homes have been built. And so when this budget commits 48,000 crores for another 8 million homes to be built for the underprivileged, the track record shows that we can do it. Now, when we've come out of a pandemic, and better than most countries, we are once again the fastest growing large economy, and that hasn't happened by accident. It has happened by massive efforts led by the Prime Minister himself, and you've seen what was needed during the last 2 years, for instance, when we had lockdowns, was the kind of direct cash assistance that my friend Pavan Varma is ruling. So 800 million people were helped, from migrant labor to rural women to 800 million people, including food grains extra assistance, which is continuing till now. That was the need of the hour for the pandemic. Now the gear is shifting to provide growth. Now, one last thing I'd like to say is that the focus of the government is not to keep people on handouts or to give more and more support, but to increase their incomes. So you've seen what's being done for farmers, which also helps the poor. Massive 2.37 lakh crores in MSP assistance to 16 million farmers, that ultimately goes to help the poor. 45,000 crores Ken Betwa project, 9 lakh hectares to be irrigated. These are all massive things. But to say that highways, or to say that entrepreneurship, to say that boosting startups, the 5 lakh crores boost that will be the help to the cumulative help to MSMEs, out of which new 50,000 crores only to the hospitality sector, to say that this will not create jobs, that this will not ease the burdens that the middle class has to face, is not correct. I think the middle class will get benefits not just in the medium to long term, but in the during this budget year, I think we will see.
So you're saying that this comes down to
in
a mindset and the calculation that look, the economy is going to chug along, and it's going to lift people out of all the dire circumstances they find themselves in, create productive, meaningful employment, which will perhaps lessen their dependence on handouts. That's the calculation. Very quickly, Mr. Iyer, to the remark that this is not a gamble. This is a well thought out continuum from last year and the year before. This is not a gamble. This is backed by transparent data, etc.
I'll tell you why it's a gamble. It's a gamble because it's a gamble on high fiscal deficits and inflation. We have a situation earlier where, governments everywhere the world around, they kept printing money thinking this will not cause inflation. I'm sorry, those days are over. Inflation is rising the world over and in India. Our consumer price inflation may be up only 5.4. The wholesale price index was up 14% in January. And when imported inflation of this kind is coming in from everywhere in the world, at this point of time to say fiscal deficits don't matter, you can just keep printing money and there'll be no inflation. It's a gamble. Now, as I said, I would take the gamble too, because I do not think that being very tight fiscally and monetarily can combat inflation, which is mainly due to imported commodities, imported fuels, higher interest rates. I mean, these are things which are not easily combated by running a tough fiscal and monetary policy. So I too would take the risk. But let's be clear, it is a gamble. Right now, if you look at the budgetary figures, they seem to be assuming inflation of no more than 2 or 3% next year, which I find laughable. It will be at least double that much, maybe even 3 times as much, if you see what's happening in other countries and the fact that Indian inflation is generally higher. So we are taking the risk of very high inflation. That will undercut everything. It will undercut incomes. It will undercut the real value of your investments. It will cause havoc in your various spending and your earnings estimates. So there is a risk you are taking. It is a gamble. As I said, I would have taken the gamble too. But I would say anybody who claims there is no risk of very serious inflation is, I'm afraid, not keeping his eyes open.
Okay, Jay Panda wants to quickly respond. I want to bring in Arvind Pangariya and also Sanjeev Sanyal, Chetan Bhagat and Dr. Mehrotra. Yes. Jay Panda.
So I'm glad that Swaminathan Iyer himself says that even though I disagree with him that it's a gamble, that he would take the same gamble. And my point of view is that we have a proven track record. And though he's right about fiscal deficits, but remember this is a challenge faced by every country because of the pandemic situation and the post-pandemic situation. Consider that even though 6.9% today fiscal deficit is very high, it is far, far less than what had been projected. And there is a commitment to bring that down to 6.4% during this year itself. So there is a nice balancing of taking that extra risk of a higher fisc, at the same time keeping on reducing the fisc this year. So I'd sum it up by saying, I'll give you a cricketing analogy. When you have turned the game around after being behind because of, say, the pandemic overs, and you are beginning to hit your stride, already have the fastest growing large economy, to send in a closer like a Dhoni to finish the job may still be a risk, but that's the risk anybody would take, and the track record is pretty good that he'll get it done.
Arvind Pangariya, are you convinced?
Well, one thing I want to point out is that, Mr. Iyer was saying that you're printing money. That's not the case. There was a time way back when any fiscal deficit was financed by printing money. That's not how we finance deficit these days. You borrow from the market, and how much money gets printed is a decision of the central bank, of the RBI. So that's just a clarification. Just a couple of other side points. Mr. Panda sort of said that there are 2 economists on the panel, and Mr. Iyer is the independent one. Just want to clarify that the other economist is also equally independent. Don't
Both of you are independent.
And just one last point, Rahul, that you had said about some criticism which was saying that we are being put into this the budget indefinitely sends us into indefinitely postponed future. I thought that is what had been done in the 1950s and 60s, and we are actually living that future today, and we are trying to undo it. So that criticism actually applies, but it doesn't apply to this budget, but to those in the 60s and 70s.
Okay, before I bring in Sanjeev Sanyal, Chetan Bhagat, anti-poor budget was the word that was used by Pavan Varma. Anti-poor budget, anti-middle class budget. How do you view these remarks?
I mean, that would be, I would say, a very harsh categorization. I mean, there is nothing that has penalized. If at all there have not been, maybe they can say that no, more welfare measures weren't done. But to call something anti means some penalization, some penalty was done for the poor and middle class people, which I don't see. Listen, I mean, I just a quick summary on this. I've said something in the morning also. It's budget day. It's not Christmas, and it's the finance minister. It's not Santa Claus. So, and I think 10 days before a big election, to have a prudent budget, not reactionary, not reacting to the farmers, not reacting to what UP voters. I mean, that deserves a lot of respect, and I think that deserves, you have to commend that. I mean, even Mr. Iyer, who we were on the panel, Mr. Iyer, that day we were discussing the free budget on Friday, I think, and he said, I think it's going to be totally about UP. But today the budget is that even I expected, and most of us would have pardoned also. One or two things you would have said, we get it, there's an election, but there is nothing. It's almost like there is a signal that this is no longer that. And I think when you have a family, jo parivar hisab se chalta hai, wohi aage badhta hai. Like a family that spends sensibly sees growth. And now people are saying about jobs. Where are jobs? Okay, the government can only create so many jobs. But do you know what creates millions of jobs? A very attractive economy. And you know what creates an attractive economy? When thousands of companies want to come to India, thousands of companies get created. What do you need for that? You need an economy with fiscal prudence. You need an economy where there is a capex push, not like welfare measures. Welfare measures that are impossible to take back. What you say relief is permanent relief. And maybe there is nothing for the middle class. Something should have been done. Naam ke vaste, ek piece barfi de dete. I don't know. I don't have an answer to that. Like if there was some headline number saying that, okay, there's some 5,000 rupees saving in taxes for certain people, would that have made it great for the middle class? I don't know. But I think it's almost like the government signaling that they will not use the budget to do those things. Anyway, the welfare measures, the biggest welfare measures have not been announced on budget days by the government. So I think it's not like there'll be no more welfare measures. But I think it's really, you need to appreciate that. It's a little boring, yes, fine. It's not a Virat Kohli budget, like I said in the morning, it's not a Dhoni budget, but it's a good, solid Rahul Dravid budget. And, find me a person who doesn't like Rahul Dravid.
Okay, Dr. Mehrotra, not a gravy train. This was not a gravy train. And Sanjeev Sanyal is listening in. He's the author of the survey, the economic survey that was released yesterday. And he's going to respond now to some of those remarks that have been made. Dr. Mehrotra, not a gravy train. We all can't jump aboard and say, okay, this is it. We are all going to get a piece of this, that, the other, and the country can go to hell.
Given the state of the fiscal deficit, I wasn't expecting a gravy train. Let's go back to the capital investment, which has been increased. No question about it, a very good thing. I welcome that. It's an increase from 1.3% of GDP to 2.9% of GDP, which is unprecedented for the union government. But let's keep a sense of balance on this. The reason why the union government has felt the need to increase capex as much as it has is because in the past, historically, most of the public investment is undertaken by state governments, not by the center. The center usually has been spending only 1.3% of GDP on capex. Because the states are so fiscally strained, so constrained, and they are the ones who borne the brunt of the health pandemic, most of it, that they can't increase their capex. So the government has stepped in, and it's good news. Glad to hear that. On the jobs, whether the budget will create jobs, whether the capex will create jobs, well, the FM began by talking about 1.2 million new jobs being created each year for the next 5 years. That's 60 lakhs jobs. But do you know what the scale of the challenge is? I'm not so sure if anyone in the government or the BJP is aware of what the scale of the challenge is. 5 million new young people join the labor force looking for work, who are reasonably well educated. 5 million each year. What are they being offered? 1.2 million if that materializes. Secondly, There were 30 million people who were openly unemployed already in 2019, a 48-year high unemployment rate, and that unemployment has increased by 10 million. They also have to be catered to. Thirdly, there are millions who have gone back to agriculture, migrant labor, who were working in urban areas. The increase in employment in agriculture between 19 and 20 alone was 32 million. In other words, completely reversing the exit from agriculture that had taken place between 2004 and 19. This is the third group that has to be provided employment. Unfortunately, there is rather little in terms of accepting first, recognizing the scale of the challenge and responding to it. Secondly, and I will close with this, Pavan Varma pointed this out emphatically, and I'm going to underline this. In 2021, the health budget of the central government was 80,000 crores. In 21-22, 86,000 crores. And it's the same in 22-23. I'm absolutely appalled that in real terms, in 22-23, this is less than what it was last year. And there was hardly any increase between FY21 and FY22 in a once in a century pandemic. This is appalling. Health is a state subject, I recognize that, but 80 to 90% of state expenditure on health goes towards salaries and pensions. The central government was supposed to step in to enhance health infrastructure. National Health Policy 2017 of this government had committed to increasing health expenditure to GDP from its current level of 1.3% to 2.5% by 2025. One would have thought, last sentence, one would have thought that a COVID pandemic, a once-in-a-century pandemic, would have brought forward the commitment of 2.5% of GDP by at least 2 years. We see no
hard
such
facts
commitment.
being put forth by...
It's an anti-poor budget for this
Dr.
reason
Mehrotra,
and this reason alone.
Sanjeev Sanyal, these are some numbers. Contend with these. According to him, at least 72 million people are precariously placed in the economy as far as jobs go. Now, they might be underemployed, they might be, doing jobs which are not of a kind that are productive in any which way, what have you. But there is this problem. This budget hasn't addressed that. And most importantly, the health spend has been stagnant, despite this being a once-in-a-century pandemic. And it is anti-poor for the reasons that he sort of enunciated. Sanyal.
So thank you for having me on your show. Let me take on, first of all, a point that Mr. Iyer had made in the beginning, that notes are being printed in order to try and pump up the economy. First of all, this is a empirically verifiable fact. All you need to do is to go and look at whether or not money supply growth is spiraling out. And you'll very clearly be able to see that money supply growth has been, if anything, very restrained. I mean, perhaps this may be happening in the US and other countries, but in India, certainly the Reserve Bank has held money supply growth in a very restrained way. So this idea of going out there and printing large amounts of notes is actually factually incorrect. Now, to come to some of the other issues, absolutely, job creation is a major issue. This is not a new thing. Job creation has been a major issue for a very long time, and certainly going through 2 years of the pandemic hasn't helped. And as you will remember in the economic survey that I presented yesterday, I did point out that specifically in the case of contact-intensive services, economic activity has not come back to the levels they were pre-COVID, and certainly an area where some effort needs to be put. And you saw that in the budget. We did put in 50,000 crores in there to try and support, for example, specifically the hospitality sector. But in the end, what matters in order to create jobs is got to be growth. This is absolutely critical. I'm not a great believer in this theory of jobless growth. at the very least, growth is a necessary condition for generating jobs. And so that is what we are trying to focus on here. And how do you do that, given all the various other constraints? Well, we have clearly opted to go for infrastructure spending as a very important driver of that growth. So infrastructure spending has gone up. Incidentally, there is more than adequate evidence that infrastructure spend, which this government incidentally has repeatedly shown that it's capable of delivering on, that this kind of spending generates jobs. It is the fastest way of generating second and third order benefits to demand. It is also creates assets. That's absolutely critical, because unlike many other kinds of demand creation, this leaves behind a productive asset. So all of this put together, this is, in our view, given the very constraints, the best trade-off that can be made. I don't think it's a very large gamble at all. I mean, obviously, we live in an uncertain world,
Sanyal,
so we
the
have to adjust
criticism
to all
is that
kinds
you're
of
looking
things,
at a,
whether it's geopolitical tensions.
You're looking at a virtuous cycle to fructify over a few years. The needs are immediate. There are people who've lost jobs in the immediate. There are statistics that are being quoted by Dr. Mehrotra in the immediate.
I think
you yourself in your survey said that Manrega demand,
first of all, this idea
job
that
demands has grown. So why are we seeing a cut in the Manrega allocation, for example? Just an example.
So, first of all, I think this is a completely wrong way of thinking about it. Manrega is demand driven. So if you put an assumption into the budget, that does not mean that if demand for Manrega pops up, we will not provide it. We will provide it, the number will just go up. So I don't think looking at the budget assumption is a meaningful way of thinking about Manrega, first of all. Secondly, while it is true that Manrega demand as it stands right now is a little bit above where it was pre-COVID, it is nowhere near where it was during the peak of the lockdown or even during the second wave. They have come off very significantly from that level. And many other data is showing that jobs are growing. Whether you take into account the EPFO data or you take private sector data from even if you take private sector data, which I haven't taken into account in the economic survey, but Team Lease and Naukri.com and other kinds of data, that will also show you. So I think there is more than adequate evidence that there is acceleration in growth, that jobs are being created. Do we need to create more jobs? Absolutely yes. But the question then is not whether it should be done. The question is, what is the most sensible way of going about it? And the call that we have taken is that infrastructure spend in particular is a good way of triggering the cycle. Now, of course, in the end, you need private investment to also kick in. And for that, let me say, a lot of effort has been put in, for example, to clean up the banks. After many, many years, we have a banking system that is reasonably clean, well capitalized, NPAs are coming down. So as and when demand for funds comes back from the private sector, the banking system is absolutely a great place to be able to accelerate and support that the need for credit. So all told, we are in a reasonably good position. By the way, that's not only our sort of assessment. IMF came up with a forecast just 3-4 days ago, and it says that India will be the fastest growing economy in the world with 9% GDP growth. Now that is, that's way above my 8 to 8.5% forecast. Even for that matter, the budget assumption is even more conservative. So if anything, the government is being conservative, not being
expansive,
irresponsible at all.
Okay. Well, look, the last word hasn't been said on this, viewers, and we can very well assume that we'll be back here tomorrow night, because at 11 a.m. tomorrow, viewers, the Prime Minister is going to come out and mount a stiff defense of his budget, of the government's budget, Nirmala Sitharaman's budget, and take on some of the criticism, which is going to throw up, of course, fresh debating points. So be prepared to join us. Thank you very much all for being part of this debate, and thank you, viewers, for staying with Times Now all through the day. We'll take a short break. The news are coming up. Don't go away.